Hello everyone, our lesson for today is all about asset accounts. So there are three major classifications of balance sheet accounts. First is asset, liabilities, then stockholders' equity or owner's equity. So in this topic, we will discuss first what are those accounts that belongs to asset account. The ending balances in the balance sheet accounts will be carried forward to the next accounting year. Hence, the balance sheet accounts are called permanent accounts or real accounts. The asset accounts are usually listed first in the company's chart of accounts in the general ledger. In the general ledger, the asset accounts will normally have debit balances. The balances in some of the asset accounts will be combined and presented as a single amount when the balance sheet is prepared. For example, if a company has 10 checking accounts, the balances will be combined and the total amount will be reported on the balance sheet as the asset cash. Assets include the things or resources that a company owns that were required in a transaction and have a future value that can be measured. Assets also include some costs that are prepaid or deferred and will become expenses as the costs are used up over time. Now here are some examples of asset accounts. The first one is cash, then short-term investments, accounts receivable, allowance for doubtful accounts, or it is a contra asset account, then accrued revenues or receivables, prepaid expenses, inventory, supplies, long-term investments, land, building, equipment, vehicles, furniture and fixtures, and accumulated depreciation, or it is also a contra asset account. Now, let's discuss the description of those asset accounts. So the first one is cash. Cash includes currency, coins, checking accounts or checking account balances, petty cash funds, and customers' checks that have not yet been deposited. A company is likely to have a separate general ledger or general ledger account for each checking account, petty cash fund, etc., but will combine the amounts and will report the total as cash or cash and cash equivalents on the balance sheet. Now let's go to short-term investment. Short-term or temporary investments may include certificates of deposit, bonds, notes, etc. that will mature in less than 1 year. It may also include investments in the common or preferred stock of another corporation if the stock can be easily sold on a stock exchange. Next is accounts receivable. Accounts receivable is a right to receive amount as the result of delivering goods or services on credit. Under the accrual method of accounting, accounts receivable is debited at the time of a credit sale. Later, when the customer pays the amount owed, the company will credit accounts receivable and will debit cash. Next is allowance for doubtful accounts. The allowance for doubtful accounts is a contra asset account since its balance is intended to be a credit balance or a zero balance. When the balance in this account is combined with the balance in accounts receivable, the resulting amount is known as the net realizable value of the receivables. The allowance for doubtful accounts is used under the allowance method of reporting bad debts expense. Next is accrued revenues. Under the accrual method of accounting, revenues are to be reported when goods or services have been delivered, even if a sales invoice has not been generated. This account will report the amounts that a company has a right to receive but the sales invoices have yet to be prepared or entered in the accounts receivable. Next is prepaid expenses. Prepaid expenses, these are future expenses that have already been paid. The amounts appear as assets until the costs have been used up or expire. A common example of a prepaid expense is the payment of vehicle insurance. To illustrate this, assume that on December 29, a new company pays $6,000 for the insurance covering its vehicles for the 6-month period that will begin on January 1. As of December 31, the entire $6,000 will be a prepaid expense because none of the cost has expired. Since none of the cost expired in December, there's no insurance expense in December. The insurance expense will begin in January at a rate of $1,000 per month. This is depicted in the chart on your screen. Take note that the expense is the amount that is expiring during the month, and that prepaid amounts are the unexpired amounts and should be the balance in the asset account prepaid expense or prepaid insurance at the end of each of the months. Then inventory. Inventory is the cost of goods that have been purchased or manufactured and have not yet been sold. Then supplies. Supplies could be office supplies, manufacturing supplies, packaging supplies, or other supplies that are on hand. The cost of the supplies that remain on hand is reported as an asset. Next is long-term investment. This account or asset category will be reported on the balance sheet immediately following current assets. It may include investment in the common stock, preferred stock, and bonds of another corporation. It also includes real estate being held for sale and also money that is restricted for a long-term purpose such as the building project or the repurchase of the bonds payable. The cash surrender value of a life insurance policy owned by a company is also reported under this asset heading. Now let's go to land. This account represents the property portion of the balance sheet heading property, plant, and equipment. It reports the cost of land used in a business. Since land is assumed to last indefinitely, the cost of land is not depreciated. Now let's proceed to buildings. This account will report the cost of the building used in the business. The cost of buildings will be depreciated over their useful lives. Then equipment. This account reports the cost of the machinery and equipment used in the business. The cost of equipment will be depreciated over the equipment's useful life. And then vehicles. This account reports the cost of trucks, trailers, and automobiles used in the business. The cost of vehicles is to be depreciated over the vehicle's useful life. And then furnitures and fixtures. This account reports the cost of desks, chairs, shelvings, etc. that are used in the business. The cost of furniture and fixtures is to be depreciated over the useful lives. And then accumulated depreciation is known as a contra asset account because it has a credit balance instead of a debit balance that is typical for asset account. Whenever depreciation expense is debited for the periodic depreciation of the buildings, equipment, vehicles, the amount accumulated depreciation is credited. The credit balance in accumulated depreciation will continue to grow until an asset is sold or scrapped. However, the maximum amount of the credit balance is the cost of the asset. So, for example, if you have 50,000 cost of the vehicle, so your maximum amount of the credit balance must not exceed 50,000. So that ends our topic for today about asset accounts. And I hope you learned something. Have a good day, everyone.